Welcome to Financial Focus, brought to you by GulfCoast Financial Services founder and CEO, John Kuykendall. John and his team of financial, legal, and tax professionals have been providing North Florida savers and investors sound, comprehensive financial guidance for over 30 years, helping you to achieve important life and planning goals. Be sure to like, subscribe, share, and tune in for more Financial Focus by visiting GulfCoastFinancial.net.
And welcome into the program. This is Financial Focus, brought to you by the best of the best in financial services, 8 years and running, as named by the readers of the Lake City Reporter, celebrating 31 years, serving North Central Florida savers and investors in formulating the plans and achieving your financial and retirement goals. Ladies and gentlemen, the team from GulfCoast Financial Services, founder and CEO John Kuykendall, here with us, providing the insight and guidance as always, and we do appreciate that, John. Now, we've got this debt ceiling debate looming, and it seems like those that could do anything about it are busy just kind of playing chicken with the world's largest economy. So what is the debt ceiling debate, and how could it affect our finances?
Well, it's amazing, Peter, that we have this bipartisan thing going on where the Democrats are on one side and the Republicans on the other. And, it's interesting that we've had the debt limit for 100 years. And in reading about the debt limit, it was interesting to find out the last time we've had this problem of reaching the debt limit was during the Trump administration. And then in 2020, we did the wonderful thing of suspending it. So the Congress could spend whatever they want, and we didn't have to worry about the debt limit. So that's why we haven't really heard anything about it. So in 2022, when we started, or 2021, when we started the debt ceiling again, that old thing had expired. We added what we owed to the current debt ceiling, so we didn't have to go back to the Congress to get this voted on. It was very interesting because we added $6.5 trillion to our existing debt in one swoop.
Not an everyday occurrence in most U.S. households, but seems just kind of par for the course, and like they're ignoring this up there in D.C. Is there anything that can be done other than coming to terms and finding some agreement to just raise that debt ceiling again?
Well, what will happen is we have to raise the debt ceiling, because what happens if we don't, Peter, is that we can't pay Social Security checks. We can't fund Medicare. We can't fund the military. We can't fund government. And if you think about the millions of people that are employed by the U.S. government, it would be catastrophic to our economy. So when you look at all the things that happen when we can't fund our debt and keep the government going, it's really too much for us to bear. It's really one of those things too big to fail. I mean, we have to do it. So it's a question of how much we do and how much we put, on it. It's amazing to me that raising a debt limit doesn't give the Treasury the right to spend more money. It just gives them the right to pay for what they've already committed to. So we don't balance like a normal business. The government. And I think maybe we need to get some businessmen in there and start running this thing like a business. Wasn't it Ronald Reagan that had the zero-based budget?
And I believe Newt Gingrich for maybe 1 year sometime in the 90s as well, right?
Yeah, that's right. And so, when you do that and you're looking at everything, but right now we're just spending money trying to fight inflation, trying to pay for all the things that we've committed to. And there's no way in the world, Peter, that we're not going to increase the debt limit. It's just a question of how much we're going to increase it, because if we don't increase it enough, we'll be back to this next year or the year after. And so this could be an ongoing thing. What the Democrats are trying to do right now is get the budget, this thing extended till next year so that they can fund the obligation, and then we'll look at increasing the debt limit next year. So something's going to happen. It's just a matter of how much heartburn, which will affect the market, because the more turmoil we have in the stock market, the more the market's going to go down. I think during the Trump thing, it went down 14% just because of the talk during the week leading up to the extension.
And that was in a short period, but they finally had that kumbaya and agreed before defaulting that they would extend that debt ceiling. But we're at $32 trillion and pushing. The USDebtClock.org is kind of a scary place to look at all of the numbers. Could a default or even a debate about extending this have volatility in the stock market, and therefore should investors be wary and consider their risk exposure?
Well, it's something that we can't ignore, Peter. I think everybody who's in the stock market has to be aware of these talks and be cognizant of what's going on within the parties. Because if they debate this thing very much, or if it looks like it's not going to pass, and if it looks like we are going to default, Moody's already downgraded us one time in the past, and that created tremendous turmoil in the market. So, if we get downgraded to a point where our debt is not worth, not AAA debt, then it's not worth as much, and it's going to be harder to find people to buy the debt that we have existing. So you could create a real bad situation, and the stock market will suffer because of this. So we really need to stay focused on what's happening. This isn't something that's going to be automatic. It's not something that's going to happen tomorrow. There's going to be a lot of debate. There's going to be a lot of nervousness with investors as we go forward. And so we really need to be mindful. And if we get close to this not extending and we're getting near the end, you might want to trim back on your amount in the stock market or pay more closer attention to limit your losses if we have them.
And what kind of steps are you taking there at GulfCoast Financial Services for your clients, John?
Well, we've always been a proactive investor. So as the market moves, we try to move with it. Right now, we're invested in T-bills and CDs, and we have some stock mutual funds and ETFs that we've invested in. But, we'll be ready to trim those back if we have to as we see this market. I know that, right now the Dow's already given up all the gains for the year. And so we're back to square one, and it could get worse before it gets better, Peter.
Well, when in doubt, zoom out. And to put it in perspective, John, we have seen difficulties in the market before. There have been times where we've seen volatility and declines. But if you look at it from a 30,000-foot view, backed out perspective, the market is a strong instrument for growth on capital and appreciation over time. And I know that you use that as a tool, one of your tools that you have available there for clients to benefit and make their financial progress there at GulfCoast Financial Services.
Well, this is the reason that we try to coach, that we don't put all of our eggs in one basket. And if you're in the market and if you're retired and you're drawing money out of the bucket that's in the market, your balance is declining. And so what we hope to have is that income plan, Peter, that financially focused income plan that will give us that predictable, sustainable income. So in times like this, when things are volatile, we can cut back on the wants, as I like to say, and focus on having the needs funded, not by that growth bucket, but more by the income bucket.
Balance is important, ladies and gentlemen, and keeping things in perspective. Having the plan in place may be the most important thing to accomplish those, as well as accomplishing your important financial goals. And John and his team there at GulfCoast Financial Services do make the offer available to listeners to this program, to viewers of the podcast, to put together that financially focused written retirement income plan. All you need to do is reach out and be in touch as the first step. Give them a call at 386-755-9018. 386-755-9018, 386-755-9018, or visit online, GulfCoastFinancial.net, GulfCoastFinancial.net. Some additional great resources, information, reports there, all kinds of educational material, as well as previous editions of the program. You can find a podcast program show on almost any specific question or financial topic that you may have on your mind, and always trying to keep listeners and viewers updated on current important financial events as well. And John, we always appreciate the time in doing that.
Thank you, Peter. It's great to be here this week. I hope everybody out there is attuned to what's happening in the marketplace and really watching this political debate.
And if you don't want to take the time to do that, that's what John and the team at GulfCoast Financial Services can do for you on your behalf to make sure that your money keeps progress and tracking towards your financial goals. Give them a call, 386-755-9018. That's 386-755-9018. Once again, John, we appreciate the time.
Thank you, Peter.
Be sure to like, subscribe, share, and tune in for more financial focus by visiting GulfCoastFinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities, Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through GulfCoast Financial Services, Inc., a registered investment advisor in Florida. GulfCoast Financial Services, Inc. is not affiliated with Kovac Securities, Inc. or Kovac Advisors, Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors, including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions.